I see you're in Jackson Hole. Is this correct? So, how do you put this move in context with what we've already been seeing with oil on the defensive?
Yeah, I think it's really keeping with the trend we've seen all summer is the concerns about demand destruction. I mean, crude has been one of the principal casualties of the trade war. So I think the real concern is that we're not going to get out of this trade war anytime soon and that oil is going to have a weak demand outlook. Now, in terms of U.S. exports to China, those had already been falling off since the trade war had resumed. I mean, exports had only been averaging about 110,000 barrels a day. China can source those barrels from other countries, so it's not a really big story for the physical markets. I think it's more about what does this mean for demand. I don't think oil can really move higher as long as we have these real trade war fears.
So just elaborate on that last point about oil, because the Chinese are targeting it. How much of an export market is China for U.S. producers? How much does it hurt U.S. producers if those tariff rates go up and if Chinese buyers look elsewhere?
I mean, it is not a big U.S. market in terms of where we send our exports. The U.S. sends primarily exports to places like Canada, South Korea, India, the Netherlands. Now, back, a year ago, there had been a sense that this could be a potentially big market. It had been a sort of bright spot in the China-U.S. trade story. We were seeing increased U.S. shipments to China last year. And there was a sense that China was looking to the United States as part of its broader energy security, getting less barrels from the Middle East, getting more barrels in places like the United States. But again, since the trade war has really commenced again, China's been sourcing barrels from other places. China's been sourcing barrels from Saudi Arabia, from Russia, from Angola, from Brazil. They've also had to make up for the lost Iranian barrels. So if you want to talk about what's been a really big disruptive story for the Chinese market, I would actually say it was the loss of barrels from Iran to China that was a bigger story in terms of China's physical market for barrels.
Given all that, Helima, I mean, I guess I could almost kind of turn it the other way and say, is it notable that WTI remains where it is, above $50? And in other words, it's not a more dramatic sell-off, at least in the short term.
I mean, I think right now, it is reflecting the fact that, this isn't a huge market for the actual product. But I think the question is going to be where we go through the end of the year is we have a very important OPEC meeting coming up in a couple weeks' time. We're going to really have to see how this producer cartel organization really responds to this weakened demand outlook picture. I mean, do we see OPEC step up and take more barrels out of the market? What do they try to do to target sentiment? How do they improve the sentiment in the market right now, which is very low?
All right, Helima, thank you very much. Appreciate you checking in as the energy sector in the S&P down more than 3% today.